overview of management accounting and also a cost center and internal order accounting. Okay, this is the first course part of course the curriculum. Okay, so as you all know, management account basically we use it for internal business reporting purpose, right? Uh, this all cost center accounting, internal orders, or product costing, profitability analysis, whatever it may be. This all is like management reporting purpose, where the top management will analyze the cost, revenues, the contribution margins, and EBIT, earnings before tax, right? So all these financial figures they analyze and they take a decision for the business future improvements, like for acquisitions uh, or carve outs, something like that. So in management accounting, the first part is cost center. Okay, you all know about the cost center accounting, right? Where the cost where originally occurs. For example, the in any business, right? So we have different departments like finance, HR, marketing, uh, or sales or admin, right? So in order to track the cost of all these departments, they use cost centers. Okay, so we will discuss internal order later, but this is cost center is like all know very. I mean, it's very simple. In legacy also you might know already. You can call it as a small department or a small unit in your organization, right? So where the real cost occurs to track those kind of cost, especially business uses cost center accounting. In cost center accounting, again, we have different kind of sub functions. We are going to discuss like cost center planning, allocations, price calculations, how it works in S4 HANA, and what are the changes in S4 HANA, how we use it to do in ECC, especially planning and allocations, and what are the changes in S4 HANA, right? So we will discuss all those, and I will also show you in the system how to do the planning and the allocations, everything, right? So at the end, I mean, if you have any questions also, we can discuss probably, I mean, at the end of the session or in between also we can discuss. Yeah, as I said earlier, as part of this course curriculum, I mean, this is the first cost center accounting and internal order. As part of that, we have management accounting business process, where I already told, right? I mean, in the management accounting business process, we have different concepts like cost center, internal order, product costing, COPA, right? Again, in product costing, we have material ledger, transfer pricing, Excel costing. That also we will discuss in detail. But yeah, these are the primary components. Okay, statistical key figures. Okay, what is statistical key figure and why we use it? I think somebody already might have some idea, but still we can discuss and we can work on this. Managing cost center and internal orders in SKFs on premises. Managing cost center on Fiori. Benefit of SKF on premises. Primary and secondary posting settlement. Okay, so here we didn't mention like allocations, cost center planning, etc. But still, I mean, I will explain what is planning and how we do, why we need to do planning, and how the planning is. I mean, how the planning will be done in S4 HANA, because it's completely changed when compared to ECC, especially the cost center planning and the activity rates and everything. Now we have Fury apps and other Excel upload functionalities. Okay, so everything I'm going to discuss. Okay, so as I said, in the management accounting, we have cost center accounting, order and project accounting, activity-based costing, cost object controlling, and probability analysis. Okay, these are the main components of the management accounting, as we already discussed. As part of order and project accounting, we will cover the internal orders and process order, production order. One example we can take, but we are not going to discuss anything about the project systems, right? It's not part of our course curriculum. Okay, but we will discuss either process order or production order. Okay, one business case we will take, and I will give you the demo on how the configuration will work, how the value flows from cost center to order and order to Now, activity-based costing, activity-based costing is also there in ECC, but it's also available in SAP S4. But S4, I mean, in all the new implementations, SAP itself suggesting don't use activity-based costing because there is a reason behind it. Probably you guys might heard about universal parallel accounting. So UPA is like new feature which is going to come. I mean, they've already introduced in 2023, but as of now, I'm not sure. I mean, anybody is using it, but now clients are prefer to use that new component of SAP, where universal parallel accounting. Okay, it has some advantages and disadvantages, where SAP is enabling new features and some of the features are no more available. For example, activity-based costing. In future, there is no activity-based costing in S4 HANA. Okay, with UPA, Universal Parallel Accounting. It's, I mean, already released in 2023, but still some, testing and other things are going on. Nowadays, clients are preferring to implement UPA. Okay, so that's what APA, I mean, this activity-based costing will not be available anymore in S4 HANA. Rather, we use standard costing with activity types and all. Okay, I will tell you, I mean, later what is activity-based costing and what is normal costing. If somebody knows about it, it's fine. But yeah, still, I will give you a brief introduction and why SAP is not doing any kind of. I mean, they're not spending their time or money on this base particular component, and they're not going to bring it to UPA and future as for upgradations. Okay. And cost object controlling, profitability analysis. When you say cost object controlling, here the actual costing, production, everything will take place. There are two things, internal order and cost center. Both are cost object which collects the cost. Okay. But cost center is like a long-term purpose. For example, in our organization, right, you have finance department, HR department. Probably you can create a cost center. I mean, your under finance also there will be separate sub functions also like tax, planning, budgeting, etc. I mean, some divs are there, but still, I'm giving one example. It's like a long-term purpose where you use once you create it, you will use it for a long-term purpose. When it comes to internal order, it is like the life of the internal order is very short, meaning it will be used to track expenditure related to a particular job or a particular event. For example, your let's say you are manufacturing the cars. Okay, you have already invented a new car. You would like to introduce a new car in the market. Okay, for that purpose, what happens? I mean, there will be some exhibitions and everything will happen right across the country or across, I mean, cities. Whenever there is car exhibition, you're going to, showcase your car, right? So we are, introducing this new car in next 1 year or maybe next 6 months. So for that, you will do some kind of marketing activities there. Okay, in order to track those marketing expenditure, particularly your requirement is, your management requirement is to track that particular event cost, okay, separately. Your marketing department will have a separate cost center, though they want to track these particular event cost, right, separately. For that purpose, you will create an order. You will post all the expenditure related to that event. Once that event is closed, you will transfer that cost. I mean, when I say transfer, you will settle that cost to the marketing cost center. So at the end, it will show the cost of the whole cost of that event in the marketing cost center. Okay. So in a nutshell, internal orders are being used for short-term events or short-term specific purpose, not only the exhibition in your organization. Let's say they're going to conduct annual days or something, right? I mean, some kind of events they will organize. For that organize, they will spend some cost, right? In order to track the cost of that event, right? We need internal. I mean, we need some specific cost object so that we can track the expenditure, or else you are conducting the same kind of events in different locations. At the end, being a CFO of the company, I would like to know what is cost of my event in Bangalore, what of cost of event in Chennai, what of the cost of event in the Hyderabad, right? So likewise, we can have separate internal order for each event, and at the end, you can compare the cost between all the events. So yeah, as we discussed, cost and revenue element accounting, overhead cost accounting, cost center accounting. So when I say cost and revenue element accounting, it's nothing but your GL accounts. Okay, like we have revenue elements and we have cost elements. When I say cost elements, like your I would say salaries, rent, power, electricity. These all we call it as cost, right? When I say revenue, your sales revenue. When I say sales revenue, it's an operating income. There will be some non-operating income also. For example, how you will get non-operating income? Any idea? There will be operating and non-operating, right? For anything like operating cost and non-operating cost. If you, I mean, your company your company main business is like selling of manufacturing and selling of cars. Apart from that, they may give some. They invest somewhere and they can get some kind of revenue, right? It's kind of non-operating, and also sometimes let's say they have scrap parts, right? The scrap sales, etc. Apart from the main business, they also may involve in other activities, providing some kind of services, those kind of, small services, etc. So non-operating income. So yeah, we have non-operating operating cost and non-operating cost as well. When you say operating cost, the cost which is directly related to the production. Non-operating cost like your, taxes, right? And any other expenditure, we call it as non-operating expenditure, which is not directly related to the manufacturing or your business. Okay. Overhead cost accounting. So this overhead cost accounting, we have again direct overheads and indirect overhead, and this we will discuss during the product costing concept. Okay. Cost center accounting, internal orders we discussed, activity based costing. Okay. This also during the product costing, it will give you more clarity. If I discuss now also, it will, it doesn't make any sense. So once we get, understanding the basic things, then we will discuss the the complex concepts. Product cost controlling, profitability analysis. Okay. These all are sub-components of management accounting as we discussed. So again, we are going to discuss each and everything in detail, and also we will see all these components in the system, how it works. Okay. So at the end, in the COPA, in the management accounting, this profitability segment, right? So here, this is COPA. We call it as in S4. Now, no more it's, still we call it as COPA, but in ECC, if you remember, we have two kind of profitability analysis. One is like accounting based COPA. Second one is costing based COPA. Now, once S4 came into picture, they have done so many enhancements and improvements in accounting based COPA. SAP also, used combined COPA. You can use accounting based and costing based COPA together. They come up with combined based COPA. Now, in the latest versions, there is no combined COPA. Now we have marginal analysis. The accounting based COPA, they named it as marginal analysis. Okay. Now there is no profitability analysis. If it's a profitability analysis, but they renamed this component as marginal analysis. Okay. So yeah, the flow is like, we have internal orders, cost centers, process, product cost controlling, profit centers. So all expenditure will be posted with all these components. At the end, everything will goes to profitability analysis. For example, cost, there are some cost we will post to the cost center. Okay, we will post cost to the internal order. You can transfer the cost from internal order to COPA. you will post expenditure at the process orders or production orders in the product cost controlling. Again, the variances will go to COPA, right? Everything, I mean, the all expenses and revenues related to your business or your manufacturing products will go to COPA, and the profitability analysis, okay, we will analyze the profitability. Okay, we will discuss in detail how it works and what are the subcomponents of this COPA and everything. Okay, in a nutshell, these are the major components in management accounting. One is cost center, internal orders, product costing, profitability analysis, profit center accounting. Okay. Yeah. If you see here, the management accounting architecture, we have profitability analysis. We have profit center accounting in Newgel, where we can see your balance sheet, profit and loss statement. Okay. In the overhead management, we have activity cost, budgeted cost, internal orders. And the product costing, again, we have projects. I mean, we are not going to discuss this project, but production orders, sales orders, variance, actual cost. This is the structure and how the cost will flow. So the highest of unit is, like, as I said, profitability analysis. Whatever the cost we post in all independent units, right? At the end, it will goes to COPA, profitability analysis, where we do our marginal analysis. Like, when I say marginal analysis, it's nothing but profitability of an organization, like each product wise, customer wise, or division, distribution channel, etc. Likewise, I mean, they draw their profitability and they can do the analysis. Okay. Yeah. Now we will discuss I told you, right? I mean, the allocations and everything. So in the overhead cost controlling, we have planning. When we say planning, the primary cost planning. So why we need planning? So for every organization, the planning is important. I mean, for the next 1 year, not only the organization, right? So for as an individual also, we should plan for the at least next 1 month. What are the costs? At least, I mean, the foreseen expenditure we need to know, right? And at the end, we need to compare. I mean, where I spend more, okay, where I spend less, and also when you have planning and when you have actual data, then you can compare. Okay, what is my plan cost for this year or for this month or for this quarter, and what is my actuals, where I spend literally extra, where I spend very less, where I can reduce. I mean, where I can reduce my cost, where I can still do improvements in my business, cost, business processes, or where I can improve my business activities, or where I can reduce my cost. This kind of things you can get. So simply you can get an overview of, you can compare your cost, and in ahead of forecast. I mean, for the whole year, we can. I mean, business what generally do, they'll do planning at the beginning of the year, and they will see month or quarterly. Once they'll compare the cost with the actuals, and again they will do their planning for the future months or future years, right? So it will also, like, when they're doing planning, there will be some foreseen activities, some unforeseen activities. When I say unforeseen activities, let's say their planning for this year is to spend some, let's say, some 100 million euros or maybe 100 million USD. Let's say, I mean, in 2019 we all got affected with pandemic, right? So this kind of unforeseen activities, or maybe some natural calamities, or maybe some kind of uh, downtrend in the market, right? In order to get rid of all these kind of unforeseen events, they will plan their expenditure, right? So that, I mean, they can sustain all these unforeseen activities. So it will give them the chance. Okay, I mean, everyone will allocate the cost so that they can face these kind of challenges. So planning will give you to compare and give the detailed analysis of your costing. Okay, this price calculation is nothing but in product costing, right? So we need to calculate the labor cost, machine cost, setup cost. I mean, it's again it depends upon what kind of business you do, whether you are doing a car manufacturing or a chemical manufacturer, or uh, oil and gas. Based on that, the activities will vary, right? Assembling, cleaning, cutting, bending, heating, these kind of things are there. For those activity types, we need to calculate per hour rate. In any organization, machine and labor are common, right? So what is your labor per hour rate? When I say labor, the people who are working directly in the manufacturing process. Okay, that is about price calculations. I mean, still we will discuss during the product costing this concept. But this is, I mean, the integration between product costing and cost center accounting, this price calculations. The price calculations we will do in cost center accounting, but we will use it in the product costing. So basically, I mean, any organization, right? We have a different kind of cost centers. There are service cost centers, production cost center, maintenance cost centers. Okay. When I say service cost center, like your finance, HR, admin, marketing, sales, these are all service cost centers. Okay. And we have production cost centers. Production cost centers are typically, okay, most of the cases, 99% of the cases, the production cost center is nothing but your machine. Okay. Generally, I mean, how business will define production cost center. There will be a production department. Again, under production department, you have quality and you have production. But still within the production department, what I mean, they will use. There are a lot of machines, right? So they'll spend crores of rupees on the machine. That machine they create at a cost center. So what are all the expenditure they're going to incur for that machine, right? They will book it to that machine. Like for running a machine, we need, first of all, the machine, we need electricity, or maybe we need fuel. Sometimes we may need gas also, and we need repairs and maintenance cost for the machine, right? And we also have depreciation for that machine. So likewise, we have service cost centers, production cost centers. Okay, I mean, just we discuss now service and production. Okay, so this finance department, all these HR, admin, marketing, these guys are not directly involving in the production process, but they are working for our organization. So if you are a manufacturer, right? So for any, let's say you are manufacturing a car, we will take example because we will understand the process very easily. Since, I mean, if you are manufacturing the car, what are all the cost we incur, right? First, car has different components, like it has chassis, okay, it has wheels, it has gearbox, okay, and other components like windshield, etc. These are all parts of the car. To make that car, we need assembling, right? I mean, someone has to come, either a robot or a man has to come, and he has to assemble all the parts into a car, right? This is the manufacturing process. But to selling that car, we need other people help, like sales department. To procure these raw materials, we need help from the marketing department. Okay. To run all these payments, processing, invoicing, and everything, we need finance department help. Okay. To monitor all these employees, again, we have a separate department, HR and admin. Okay. Indirectly, these all people are working for this organization. Then at the end, let's say we have finance department. So finance department, though they are not directly involving the production process, they are indirectly servicing to the organization. When you determine your cost of the car, right, apart from the material cost and also the the process assembly cost, these guys are also providing services. some organizations, what they do, they transfer some portion of cost to these production cost centers, because finance department is not only working for their, right? I mean, not for finance department. Their cost is, at the end, we have to allocate to all other departments also. Like they're spending their some of the time for production, some of the time for HR admin, all right. So likewise, I mean, the service cost center's cost, we will transfer from one cost center to another cost center. Majorly, all the service cost centers will go to production cost centers, so that in the production cost center, we will get to know. I mean, once all these cost center cost transfer to production cost center, there they will calculate the rates. Okay. For example, you have machine activity, you have labor activity. I mean, we will take it simple. Okay. What is the labor rate? When I say labor rate, what happens? There will be direct labor and indirect labor. When I say direct labor, like the people who are working in that manufacturing process, they call it as direct labor. Indirect labor is like all services. The service cost also will get transferred to production department, where they calculate, I mean, they will get the indirect labor cost. So altogether, they will get what is the labor hour. But I'm not saying like this is the fixed process, but this is the generic process will all business will follow. What I mean, at a thumb rule also, for at any period of time, right, the cost center balance has to become zero. Okay, let's say you have posted 100,000 euros, okay, to a particular cost center. At the end, there should be a credit of 1,000 euros. So if you run your report at the month end, your cost center balance should become zero. This is the thumb rule in costing. Okay, what happens if the cost is not zero? What is the complications? Thumb rule in costing is like any cost center, right? Let's take the production cost center. Okay, you have debit of 100,000 euros. Okay, there should be a subsequent credit of 100,000 euros. If not, what happens? You spend 100k euros. Okay, that means that 100k euros includes your depreciation, your maintenance, repairs, all other cost. I mean, the cost which is came from the service department cost. Okay, how the credits will come when you are manufacturing? How many? In the initial, I told machine. I mean, the production cost center is like machine, right? If that machine runs for, let's say, 1 day, 24 hours. Let's assume they are working 3 shifts, 8 hours per shift. Okay, in a month, how many? I mean, assume 30 days in a month. Okay, they're working 24/7. Then 240 hours per month, right? So that machine will work 240 hours in a month. Okay, let's assume this, you spent 100k euros or maybe 100k USD in a month. That 100k has to absorb to production. The whole 100k has to be absorbed to the production. If it is not absorbed 100k to production, then you're utilizing your resources not properly, right? So you spent 100k, but you didn't absorb that 100k to the production, means you have not utilized your machine to the complete complete capacity of the machine. Okay, that means what happens? Either there could be reasons. Either there might be a breakdown in between, right? Or you're not running the machine properly. I mean, or there be in breakdown or idle time. Okay, you have, the machine has to work 300 hours, but you worked, I mean, it has to work 240 hours, but you worked only 200 hours. Okay, if you work 240 hours, the 100k will be absorbed to the production. I mean, otherwise, what happens? The remaining, I mean, 240 hours, they worked only 200 hours. Then what happens? Instead of 100k, only 90k will be transferred to the production. and remaining 10K will be still remains at the cost center. So this we call it as either under absorption or over absorption. Again, this cost you have to transfer to COPA to analyze your original profitability. Okay, so either under absorption or over absorption cost also we will transfer to COPA, so that we will get, I mean, what are the cost we have posted, right? At the end, it has to be nullified. So if you spend one euro or 1 rupee, at that same time we get some kind of input, right? Let's say if you get 1 euro output, then there is no profit, no gain. If you get only 90, then it will be loss. If you get 110, it is a profit, right? So in order to get your accurate profit and loss, okay, we need to transfer the cost center cost to COPA or some other cost center. At the end, the cost center balance should become zero. Okay, then only you will get your accurate P&L, I mean profitability reporting in your organization. But it is not must rule. It's a thumb rule, but it's I mean SAP, I mean not only SAP, the costing principle says at the end of the period your cost of the cost center should become zero. Okay, but it is not mandatory to do that. Some organizations follow that and some may not. Okay, some guys will, okay, let it be, they will not do anything. It's again how deeply you are using your controlling module. Based on that, some people just, they will, you create the cost center and they will see what is cost, what cost got posted on that cost center, what allocations they have done, that's it. They will not use the remaining or unabsorbed cost in the further processing. But some people will use the whole picture. I mean, in order to get the, I mean, the inaccurate profitability, we have to follow this process. Now, process allocation, this is nothing but the activity types and all we said, right? That is the process allocation. We talk in the product costing again. Activity allocation, we have fixed and variable, right? When we say any activity, right, there are fixed, I mean, activity, we have fixed time and variable time also. For example, for any particular machine, right? Let's say, I mean, machine time is like always fixed, or I mean, it will have fixed and variable. Let's say depreciation. Depreciation is like, you will, how you will calculate? I mean, depreciation is like 10% per year or something like that, right? It's fixed cost. Okay. When you say variable, it varies. The fixed cost is fixed irrespective of your output. Okay. For example, in product costing, we will discuss this detail once again. Okay. When I say fixed, the manufacturing hours or maybe the cost also. For example, depreciation will be the fixed amount, right? Every month for this particular machine. Okay. Right. I mean, when we will fix the percentage, right? I mean, whether it is straight line or diminishing, whatever the depreciation methods you follow. I think you might know about asset accounting already. So in the asset accounting, you define all these depreciation calculations and everything. So the depreciation cost is always fixed. Okay. So per year or maybe per month or whatever it may, if it is per year 10%, then 1 month you will charge like 0.9 or something. Okay. So let's say we talk about per year. Per year, the cost is like 10,000, I mean, maybe 10%. So that is fixed cost, fixed percentage. When you say variable, for running the same machine, we need, let's say, electricity. Okay. Or maybe gas or maybe fuel. So fuel cost is variable because how many, when I say fuel, it might be, I mean, let's say machine, we need electricity. So electricity is like variable cost. Based on how many hours this machine runs, accordingly, this cost will vary, right? I mean, electricity cost. It's not fixed. It is variable based on your consumption or utilization. This cost will increase. Whereas fixed, irrespective of your machine. I mean, whether you work 20 hours per day or 24 hours per day, or maybe in a year, let's say 1,000 hours or maybe 500 hours, let the machine work. But the depreciation for any machine, there will be a lifetime, like 10 years or maybe 15 years. Within that 15 years, the whole cost has to be depreciated. So in the product costing, we have preliminary costing, simultaneous costing, final costing, and cost calculation of actual cost of goods sold. Preliminary costing is nothing but, for manufacturing any product, right? We need to estimate the cost of the product first, so that we will get to know how much cost we are going to incur by manufacturing this product. Once you know the cost of the product, then you can compare with the market price in the market for what cost we are getting this product. Okay, then you can take a decision, make or buy, whether I would like to make this product or I would like to buy this product from someone and sell it to business. So for that purpose, we will do preliminary costing. By using this preliminary costing, we will get to know, I mean, make or buy decisions they'll do by using the preliminary costing. Simultaneous costing is nothing but the actual costing. I mean, when we do the actual manufacturing process, where the actual cost incurs, that we call it as simultaneous costing. Final costing and calculation of cost of goods manufactured. So the main purpose of product costing is to calculate the actual cost of goods manufactured. I mean, to manufacture any product, what is your actual cost of goods manufactured? And also we will get variances of that manufacturing process that we will discuss as course of this, system demo and during the product cost controlling. Actual cost. This is calculation of actual cost of goods manufactured is nothing but this part is like material ledger. Okay, when I say product costing, it includes material ledger actual costing also. So this part is denotes the material ledger actual costing. That also we will discuss later. Simultaneous costing is like all the actual postings. In the final costing, we do all the month end process and everything. At the end, I mean, we will get the actual cost of goods manufactured. Yeah. Again, here sales or revenue or business planning in the probability analysis. As I said, I mean, in COPA also we can do revenue planning, drill down reporting. Drill down reporting is nothing but at product level, product group, customer group, division, region, country, or different kind of drill downs available in probability. Profit center analysis, I told you, I mean, in COPA, again, if you want, profit center will be another characteristic. At profit center level also, you can draw your profitability. And parallel valuation, transfer pricing. This is part of material ledger. We will discuss this also, how, I mean, the parallel valuation will works. Okay, so parallel valuation is nothing but, I mean, when I say parallel valuation, it's basically related to your inventory valuation. So any business, right, they can do their inventory valuation in different currencies and also different valuations like profit center valuation or group valuation. Why they do that? Generally, I mean, when you are operating your business in multiple countries or maybe multiple business units, right? When you do goods movement between your, let's say you have one company. I mean, you're a corp. I mean, you have one company. Under one company, you have multiple divisions or maybe multiple manufacturing units, or you're operating in different places, right? When you are transferring your goods and services within the organization, right? Some people will do, what do you say, internal margins. I mean, let's say you are let's say I will tell you one good example, like Reliance. Reliance has many sub businesses, right? They have retail, they have oil and gas, I mean, oil business, etc. When, I mean, they are selling their business within, right? When they are selling a product or a service within their I mean, within their group, right? It's not the real revenue. Okay, though it's a sell, it's a sales, but they cannot consider it consider it as a real sale, because when you sell the product to the end customer, then only we can consider it as an end sale. But still, for the tax and other purposes, they will consider as a sale. Okay, to eliminate for a consolidate, at a group level, when you are consolidating your profitability or you are consolidating your financial statements, in order to get your net sales, you need your inventory or valuations, or in different valuations, like within the group or outside the group, what is your revenue. In order to get those kind of holistic view, we need parallel valuation and transfer pricing. By using this concept, we can eliminate intercompany transfers. When intercompany margins, I would say intercompany margins, in our business will get to know, okay, this sale is not the real sale, but still it has generated some revenue. In the sending company, they can call it as a revenue, but at a group level, they cannot still call it as a revenue, because it's not the real revenue. It's still not reached to the end customer. Okay. Parallel valuation, somebody told already, either it can be currency or it can be a valuation at a group or profit center level. Okay. Yeah, this again, we will discuss in detail in the material ledger, during the material ledger, how it looks, the parallel valuation. We will discuss. Yeah, all these topics again, in detail, we will discuss one more time when it comes. Like now we are start with overhead cost center accounting, then we will start product costing. At the end, we will discuss the profitability analysis. Okay, same what we discussed, right? The flow of values within the management accounting. So from all cost center to this process to COP, at the end, everything is, pointing out towards the profitability segment, right? So everything, what all the cost you post, all components, at the end, it will goes to profitability, where you will analyze your profitability of the product or your organization. Okay. Okay. First, here in the presentation, we have statistical key figures. But first, we will start with this cost centers. Okay. Okay. We will talk about the cost center accounting first. So, when you are going for any implementation, right? So the major challenge is defining the cost centers. Okay. How you gonna define your cost center? Okay, because business will ask to for them, for each and everything they need is cost center. But some big organizations, they will have a user guide kind of thing. For master data governance, there will be a master data governance team. Okay, and they will all the rules to create this master data. How to create a cost center, how to create a GL account, and they have some rules and regulations and everything. Okay, but these cost center is not only cost center. Any master data is very important. Okay, but when comes to cost center, first we need to define the organization structure, right? Cost center hierarchy. So in that cost center hierarchy, we need to understand what is their business structure, at what level they want to analyze their cost. Okay, especially when nowadays all transformations are going on, right? In ECC, they have different structure, because they might used since 4.7 or those versions. Some people are still there, and they have different org structures. They are using uh, many cost centers, right? Now, when we are discussing defining the cost center, we need to discuss whether we can merge. Let's say these machines, right? They have some 100 machines in that production. plant. Whether these 100 machines can be clubbed into some 30 machines, right? Because some kind of machines, they will do same business, I mean, same kind of activity. Okay. Let's say we have 3 cutting machines with different, like 3-axis, 4-axis, 5-axis machines. Okay. These 3, 4, 5-axis machines will have, I mean, will consume or will use same kind of resources. Okay. They do the same kind of business. I mean, they're using for this cutting purpose these 3 machines. At the same time, their cost or maybe their cost also more or less similar. Okay. And they're using all other resources like fuel or maybe electricity, whatever it may be, also using same kind of uh, same level of cost. In that case, what you can do, you can club the 3 machines into one cost center, right? We can suggest that one, so that it will reduce your cost centers, and also it improves. I mean, creating that machine, each machine as a cost center is not. I mean, creating cost center is not an easy. I mean, it's easy, but thereafter maintaining it and integration between integration with other production people, it makes complicated. If the master data is volume is very used, especially the migration, and after migration also maintenance of these rates, and again that cost center you have to link to work center or maybe resource. These kind of interrelated activities will be more complicated. Thereafter, I mean, creating master recipes process, bomb recipes or routings also makes complicated. So we try to reduce the cost center as much as possible. Okay. Yeah. So in the cost center, the highest hierarchy is the cost center hierarchy. Highest node is the cost center hierarchy, where we call it as standard hierarchy. I will show you in the system tomorrow probably. So in cost center, again, I mean, in S4 HANA, in cost center, I mean, master data perspective, there is no changes. What we have there in ECC, same KS01, KS02, those transaction codes only. Still, we use it to create cost centers. For example, still the KS01 will work here. Okay, there is no change here. But when you are defining the cost center, the naming conventions are very important. It has maximum 10. It allows you create maximum 10 characteristics. For example, here. Okay, this cost center naming. Okay, it will allow maximum 10 characteristics. Okay. So again, business will have different rules. How they want to, I mean, the naming convention also important. By seeing that name, they will understand, okay, this cost center belongs to finance, this cost center belongs to HR or production subdivision, something like that. So what generally they do, first 2-digit might be the company code name, right? And second 2-digit might be the function, like it is a production or plan, finance, HR, something like that, and also other numbers. I mean, they use different combinations. It's again depends on the case to case, okay, business to business. But in general, what happens? I mean, they'll use the company code, because when you have multiple company codes, it's difficult to understand. I mean, the cost center belongs to which company code, right? So, in general, I mean, that's the rule business will follow. First 2 digits or maybe 4 digits also for the company code, 1 or 2 digits for the function, and other digits are for the serial number, 1, 2, 3, 4, something like that. Accordingly, they create the cost centers. Okay. Fury app also for creating cost centers. I mean, either through Fury app or normal, you can create a cost center. In S4, that is the additional function for cost center accounting. I mean, by using create cost center Fury app, where by using the app also, Fury app, you can create a cost center. See, cost element is nothing but your GL account. Okay. See, for example, income statement account. So, okay. Okay. So cost element is nothing but this GL account. Okay. In S4, GL account. See, in ECC, GL accounts and cost elements are independent type items. First, you have to create a GL account, and then you have to convert that GL account to a cost element. Okay. That, but in S4, the GL account, I mean, we cannot create cost elements separately from controlling module. Okay, meaning we have KA01, KA02. There are some transaction codes are there where we cannot use those transactions anymore. But coming to your question, cost element and GL accounts are not similar. Cost element is typically like your, say for example, this is travel expenses. Okay, which indicate what type of expense it is. That is the cost element. I mean, what type of cost it is, whether it is salary, depreciation, rent, okay, or travel expenses, water, fuel, etc. This we call it as cost element. Okay. When it comes to cost center is but typically a department. Okay, like your finance department, HR department, right? So probably when you are booking your time, I mean, I don't know. I mean, this is how it looks, but you are by default you are allocated to a particular cost center, right? When they are paying your salary, I mean, you don't know, you won't see that as an employee, but your finance department will understand you are part of which cost center. When you are booking any kind of claiming any telephone bills or something, you are going to use one WBS element, right? Or maybe cost center. That is what cost center. I mean, you belongs to a particular unit. Let's say if you are from Hyderabad, you will have a different cost center. If you are from Bangalore, you will have a different cost center. So that is the cost center. Okay. But your expenditure, I mean, let's say you are claiming, you are traveling to your client office and you are claiming your expenditure, right? That is what the GL account, the travel expenditure. Okay. Now, when comes to cost element accounting, right? In ECC, we used to create cost elements separately, but in S4, that is another biggest change. Okay. Every cost element should have a cost GL account. Okay. Every cost element, meaning whether it is primary cost element or secondary cost elements, we need a GL account. Whereas in ECC, for the secondary cost element, we don't require a GL account. Okay. I can create whatever the cost element I can create from CO with any naming. Okay. Especially secondary cost elements. But in S4 HANA, we cannot create secondary cost elements without a GL account. Okay. Meaning GL and the cost elements are tightly integrated now. There is no more reconciliation. As and when you create a GL account, if it is a P&L account, then you have to create that GL account as a cost element or a revenue element. If you go here, so this is the GL account type. Okay, we have accounting types like primary cost or revenue. If you select this one, primary cost or revenue. Okay, let me edit this one. Primary cost or revenue. Then here you will get the cost element category here itself. Okay, so here you have to select whether it is primary cost or revenue. Okay, if it is revenue, you have to select revenue account. If it is cost, you have to select the cost element. So one is like cost element category, one is like cost, 11 denotes revenue. So in the screen itself, you have to create cost element also. I mean, there is no separate screen for cost element creation. If I go to cost element creation screen also, KA01, this is the cost element. So again, it is taking me to FS00. Okay. So KA01, KA02, those transactions will not work anymore. Even, for example, KA06, this is secondary cost element creation. KA06, it will take me to FS00. So for creating, these are the secondary cost elements. So that's what we are discussing, right? So see, if you see here, secondary cost. Okay, if you want to create a secondary cost element, then you have to select account type as secondary. If you want to create primary cost element, then you have to select primary cost. Okay, and non-operating expense or non-operating income. I told you, right? So these non-operating expense, non-operating income. If you want to create a GL account without a cost element, okay, still possible, right? So some kind, for example, taxes, I mean, some kind of GL accounts, we don't need a cost element. Okay. When you create it as a cost element, when you're booking anything to the tax cost element, then it will, you know, it will ask for either, I mean, it will generally expect a cost object, either cost center, internal order, profit center, or profitability segment, something. So some expenditures, for example, taxes. Okay. Tax is a non-operating expense. Okay. You will not book it to any particular cost center. The tax is belongs to the whole organization. At a company code level, you will book the tax, but still, I mean, tax you can post it to corporate cost center. But there are some other expenditure we will not. I mean, some other GL accounts we don't use cost elements sometimes. In that case, we will select this non-operating expense or income. Okay. And the balance sheet, if you're going to create GL account as a balance sheet account, then you have to select balance sheet. Okay. For controlling purpose, when it comes to controlling, here in the cost element category, we need to select whether it is primary cost element or secondary cost element. Again, we have different type of cost elements. We use it for activity types. We need different cost elements. Work in progress, we need different cost elements. Okay. And assessment, we need different cost element category. So we will create all of them while using that functionality. For overhead also, we need different cost elements. Okay. So yeah, this is the new change. So each and every primary, whether it is primary or secondary cost element, we need a GL account. Without GL account, we cannot create cost elements. And again, now the cost element and GL account is part of finance. Okay. So if you need any additional cost elements, the CO team has to request finance team. Okay, we need so and so GL accounts for so and so purpose. Could you please create them? You cannot create. I mean, in a test environment, you can create. It doesn't mean, I mean, you cannot create, but that is what the org structure got changed. Okay, whether it is primary or secondary, we need a GL account. Without GL account, we cannot create a cost element. So yeah, in this way, whenever you book any expenditure to any account, your CO books and your FI books are updated. So everything is reconciled on the. I mean, everything is reconciled at the moment you post it online. So there is no more reconciliation required in FI and CO. All kind of postings will update, whether you book it, whether you do postings in CO, whether you do postings in FI, automatically it gets updated all the books, because now AC Docker is source of truth, right? Whatever you do, everything will goes to your AC Docker table. Earlier, I mean, if you book an expenditure, FI line items used to go to BSEG, CO line items used to go to COEP, COSS tables. Again, I mean, there is no real, now everything, your cost, everything will get updated in AC Docker. Still, BSEG and other tables also will get updated, but all the parameters are still available in AC Docker. So we will get everything on AC Docker table now. Okay, so creating cost elements also. I mean, now again, for this also we have this creating GL accounts. I think they have a Fury app. By using the Fury app also, we create GL accounts. But again, it's not a problem nowadays. Many projects are using some this what you call MDG, Master Data Governance, or some other tools also using to create the GL accounts, right? So again, it depends. But yeah, we can create either Fury app or by using SAP GUI, you can create your GL accounts. Okay. So again, I mean the cost element grouping again. I mean when you come to grouping again, still you can use the old earlier. I mean previous transactions like KAH1. Okay. So you can use the same existing transactions, but only the cost elements. You cannot use the existing transactions. I mean you have to use FS00. But creation of cost element group, still we can use the old one for grouping the cost element. Yeah, there is no change here. Okay. Now we discussed cost centers and GL accounts. Okay. Now activity types. So let's see any activity types are there here. Okay, I will take one activity. Yeah, for example, if you see here, this is machine hours one. They created one as a machine activity type. Okay. Here also there is no change. I mean, in the creation of activity master data, there is no change in ECC or S4 HANA. Same. I mean, it's same as ECC. Okay. If you see here, we need to assign for any activity type, we need to assign one secondary cost element. Okay. With category 43. Okay. This is the cost element, machine hours. If you see here, 43 is the activity allocation. I mean, if you see here, there are different kind of secondary cost elements. Let's first, we have 43 for activity types. I mean, when you're going to create activity types, we need to select 43 category. For assessments, we need to select 42. For WIP, we need to select 31 and 41. These are the majorly used activity, I mean, secondary cost element groups. We need to remember 31 is for WIP and WIP. This we will discuss in the product costing. Overheads also during product costing we will discuss. 42 during distribution and assessment. I mean, this will be used for allocation of cost from one cost center to another cost centers we use. And 43 internal activity allocation. So this is 43 will be used for activity types. So you can create, I mean, first we have to, for creating activity types, we need to create cost element categories. Sorry, we need to create secondary cost element with category 43. But when comes to activity type creation, the biggest challenge is how many activity types you need. Okay. And again, here the challenge is with the production team. I mean, PP, production planning, right? Production people will always, they will think that they want to use activity type as less as possible, because for them it's easy to maintain their master data, because they have to create routing, they have to create work centers, right? In that work centers, they have to assign activity type, and in the routing also, they have to mention the activity type, time, and everything. So in order to make their lives easy, they will try to create one or two activity types. Okay. In most of the cases, what they do, they create simply machine and setup. Okay. Or maybe labor they create. Okay. These three are sufficient for them. But when it comes to controlling, we have a challenge. What happens? I mean, if you create only these cost elements, what happens? In the product costing, the finance people will ask us, I need detailed breakup for this machine. I mean, at least the machine hours, let's say, they're manufacturing one car, okay? For car manufacturing, we use some wheels, okay? Body, gearbox, okay? Other components, okay? So we have some cost here, we have some cost here. Okay, apart from that, machine cost, labor cost, and setup cost, for example. Okay, but what happens if finance business agrees for this breakup? It is fine. But what they will expect, what my machine cost includes. Okay, they want to see, for making this product, they want to see the primary cost, because in this example, for calculating the machine activity, we use depreciation cost. For labor, we will take salaries. For setup, we need to take some other cost. See, if you create activity types like these three activity types, we only get any product. I mean, if you see the cost of the car, you will see all these product cost and only this cost. But being a CFO or the finance manager, they also would like to know, the controlling persons, they want to know what this machine cost includes. So for making this car, what is the depreciation I'm spending? What is the electricity, or maybe what is the other primary costs, right? So if you restrict your activity types to these only, then we will not get such kind of breakup. Okay, then we have an option is like either we have to create activity type at a depreciation level, one activity type, right? For electricity, we have to create one activity type. Okay, and for labor, nowadays people are not calling as labor; they call it as personal cost. Okay, and environmental cost. Okay, and others. So any business, at least most of the manufacturing business, they'll expect the primary cost split at a product level. This is their minimum requirement at the corporate, or maybe for their contribution margins. All in everywhere they want to see the cost at least like this for each product wise. Okay, if you create more activity types, what happens? Then people will say we will do planning for this, because when you just creating one activity type, it doesn't solve purpose, right? So for that we need to maintain rates. We need to maintain, once we maintain the rates in the production master data in the work center and the routing, they need to maintain hours. How many depreciation hours, how many electricity hours, how many personal cost hours. For all these, they need to maintain the hours. Okay. Here we will face the challenge with always, people guys will say, no, we will not create these many activity types. We will not accept these many activity types. Again, if you create one work center, there is a limitation. Maximum 6 activity types only we can create. Okay, let's say you have, from finance side, you have created some 10 activity types. Okay, In that case, one work center can accommodate only 6. In that case, you have to create one more work center. So it means they have to create 2 work centers, and again they have to assign those 2 work centers in the master recipe or maybe routing. For them, it is a challenge from the production planning side. So here we need to discuss with the PP. I mean, we need to involve the production planning team and the finance team. Okay. When I say finance, it's controlling, the controlling team, and the PP side from the, I mean, PP consultant and CO consultant together. They have to discuss and they have to come to a common understanding how collaboratively we can, meet this requirement. I mean, we have to satisfy the finance department requirement, and also we need to as part of the data harmonization and data cleansing, we need to maintain as less as, I mean, the master data set. I mean, these all should be very less. So here, from finance side, there are 2 options. We will discuss that again. I mean, how we can achieve this detailed breakup. Okay. Or else, if the business is happy with these 3 activity types and this cost, we are also very good. I mean, we are also very happy, and our lives also will be easy. But the problem will come if they want to see the detailed breakup. I mean, if they want to see the primary cost breakup, then we will have a challenge by defining activity type. Okay. So in from finance side, we have a concept called primary cost component split. By using that split, we can get this breakup, even though we have less activity types. That we will discuss in product costing. But just I'm giving, this is the complex scenario where when we are defining activity types. So we have to be in touch with the PP and the controlling management and production planning management, and we have to discuss this activity type all together. Otherwise, it will be a never-ending story. You will have a lot of fights in your project between PP and you. Once we create the activity types, there are 2 options. For activity type, directly you can maintain the rate. Okay. For example, you have created machine cost, labor cost, setup cost as activity types. Okay. For these activity types, you can maintain per hour rate like 10 euro, 5 euro, 6 euro, something like that. Okay. This is one way. And also, you can calculate the rate, meaning we will do the planning, the primary cost. At this level, we do the plan primary cost. Okay. At this level, we will maintain the hours. Then for machine activity, we need to build a relation between, I mean, for what are all the cost elements we need to use for calculating the machine activity type. For labor, what cost element we need to use. For setup cost element we need to use. Then we will calculate the rate in the system. That also possible. Either way, I mean, some business will directly maintain the cost. Some people will do the planning and they will ask to system to generate the price. I mean, calculate the rate. That rate they will use it for product costing. Okay. Both the options are available. Either you can directly maintain the rate by using KP26 transaction. In the KP26, if you go to KP26, yeah, here with the combination of cost center and activity type. Okay. Yeah. So once we create our activity types, and that time I will show you how to maintain the rates and everything. So we have an option. Either you can maintain the date directly or you can calculate the price separately. Okay. But maintaining rate also, we have Fury app. By using the Fury app, you can maintain the rate. Or else, I mean, the calculation part. Again, for calculation also, we have a Fury app. But here, there is no change. I mean, in S4 HANA, for activity type creation or maintaining rates, there is no change. I mean, what we have in ECC, same we have in S4 HANA. But for the planning part, okay, to plan this primary cost and plan the quantities, SAP introduced a Fury app called Import Plan Financial Data, okay, where you can upload your all data by using Excel templates. In ECC, we don't have that option. If you want to do your planning, you have to create Excel templates, or you have to use the BDC program to upload this plan financial data. Okay. Now in S4, we no need to do that. We have a Fury app, I mean, where you can download a template from that. You can add the currency. Again, there will be another challenge in the primary cost planning. You know, right? When you are using one controlling area with multiple company codes, by default, system will take the group currency as a this activity rates. Everything will be in group currency, because controlling area always takes the group currency or controlling area currency. But business want the object currency or company code currency in the activity types when they are loading their data. So that is also not available in Excel templates in ECC. I mean, we can create our own templates, and there you have to do some modifications to upload the data in the object currency or company code currency. But now we no need to do that anymore. We have an Excel template where you can add, if you know AC Docker fields already, we have KSL, HSL, some currency types are there, right? So by using that, you can tell the system which field exactly you want to update, whether you want to update HSL or KSL or some SL. So you can mention in the Excel file itself, you can do it. Okay, I will show you the Excel template also. I will check first whether that Fury apps are working or not. If not, I will ask ZaranTech to check it. Okay. Then I will show you how to do the planning as well.